Good morning. Happy Monday. It is Monday, June 10th. Enormous week ahead. And we'll go over all the catalysts. We'll go over QQQ. We'll go over Shopify because Motley Fool said this weekend buy Shopify. We'll go over why I like it, what the things are. We'll go over everything. We're going to go over a couple of things about meme stocks. We will go over July QQQ. For June, it's SPY. We will go over some social requests for CLS and some other things. And then I'll end with the scans. So my weekend consisted, by the way, I'm exhausted. I had to pick up two girls from the airport last night at, let's see, I think their plane landed at midnight. So your boy's old. Went to bed normal time, about 10 o'clock, had my alarm go off, woke up, came back, went back to bed, didn't sleep well, so, and then I have a 1 p.m. doctor's appointment. But the tragedy of the weekend was my TV. If you know me, I watch like 10, 12 hours of TV a day. And my TV, the bottom left corner, turned dark. It is working now, but if anybody has suggestions on TVs, comment, let me know which TV you love, which TV you have, which ones you haven't had luck with. I have a 10-year-old Vizio, but I do have a receiver that does the pictures, so I don't care about all the bells and whistles. Don't need a smart TV, don't need any of the other things. I just care about picture quality. So there's that. Now let's talk about the Qs, because the Qs, look, we're still holding support. Are we gonna go sideways? Probably. Look at the time when we, again, this was the all-time high back here in March, and when we hit that, we dipped. And then we soared through the 450s. Well, old resistance becomes new support. It didn't exactly support us. We broke through it for 1 day. 1 day. It was 1 day we broke through it. So if you were upset about buying it, boom, whatever, we may go through this. Remember, these are the two support levels you want to look at, 460 and 450. And this is the Qs. If we go to the S&P and we just look at SPY, I like VOO. We've gone over a long time why I like VOO. But these are the support levels in SPY, if you'd like them. There's 523. And then you get down to this one, 510. And then you get down to this one at 500. January 2022 was the all-time highs. That is the ultimate support at 479. If we are to pull back to 479, and that will probably be October, because for the last couple of years, October has been the low. And seasonally, October is the low. But if we are going through the months and we look at 31 years of seasonality, October's not that bad. It's September that's the problem. And so when do you want to buy? Well, here on SPY, you can see June, 53%. Not bad. I mean, May was a great month. Sell in May and go away. You're heading into, for the last 31 years, not a great summer. You're supposed to come back in August. You're giving up kind of a 50-50. These are better odds than freaking Vegas. So if you want to make your money, it's better odds than Vegas and just buying in the stock market for the last 31 years. That's pretty damn good. But that's SPY. And what do you want to see on we can go on QQQ and we can look at some of the seasonality. My point is, to sell in May and go away hasn't worked for a very long time. Now, for 25 years in July, SPY is at 72%. 72% SPY is up. Now, if we bring that post the financial crisis and we go January 2010, look, 14 years. 14 years. July was 100%. 14 years. July is 100%. I reiterate. I just say it again because we played this one last year. We bought TQQQ and we went into July. We bought it in June. And we went into July knowing that we could go up that much. So we'll go over some seasonality in SPY as well. But just to show you the same 14 years in SPY, July's 86%. So again, sell in May and go away post the financial crisis hasn't really worked. So when you hear these things, put them in the back of your head, process them. I'm not saying ignore them, but understand that we're still in a strong market. And May was a very good month, and June is turning out to be okay. We've got a ton of things going on right now. The biggest movers of the day, you got Southwest Airlines. We talked about Elliott Management getting involved in PINs and other ones. Elliott Management has been good. There's news that they're in love with is Southwest Airlines. That one is up 6%. It's up 7.44. Shores of Offshore Drilling, DO, soared more than 7% when they announced plans to acquire a firm and cash deal, creating a fleet of rigs. They're being bought. That's up 7%. Now we can look at CrowdStrike, we can look at KKR, and we can do GoDaddy. Why? They are being added to the S&P 500, and all are up. KKR specifically is up 10%, CrowdStrike up 5%, GoDaddy is up 5%, and they will replace Robert Half, Comerica, Illumina. Robert Half and Comerica will replace Anywhere Real Estate and AdTrend, and Illumina replaces, while Illumina replaces GoDaddy in the S&P Midcap 400. Now, Perion Network shares plunged 20% after bad guidance, blah, blah, blah. We don't really care about that. What we do care about is this week. And this is the catalyst watch for this week. You've got a ton. I wrote an entire newsletter this weekend, how to use your weekend. Let's optimize next week. Because if you are not coming into this week with a plan, and you're just showing up and you're saying, traders don't show up in the morning and say, okay, well, I should say investors don't show up in the morning and say, what am I going to do? Traders are up at like 4 o'clock in the morning and they're creating a plan. I argue that you don't need to wake up at 4 in the morning and create a plan. You can create a plan for every day with catalysts over the weekend. And this news article from Seeking Alpha that comes out on Friday, it's Friday at 3 o'clock every Friday. And you can sit there and watch it. You can bookmark it and read it over the weekend and chart some of these things. Because what do we have today? We have Apple with WWDC. We've got tons of things. Options trading volume moved higher on NVIDIA because they just went through a 10-for-1 share. Do not be alarmed when you wake up and you see NVIDIA down 90%. It went through a 10-for-1 stock split. You've got earnings watch, notable companies, Calvo Growers, Yext, and Fuel Cell. It's not interesting. All day today, Amazon will hold its 3-day AWS conference. That's going to be market moving. There's probably going to be news coming out of there. Tuesday, what do we have? We have Oracle. We have GameStop earnings, which were pre-announced. They ain't going to go over. And all day, you have Amphenol holding a split adjusted basis, 2-for-1 APH. All day, Texas Roadhouse, Anheuser-Busch, you've got all of this stuff talking, blah, blah, blah. You've got Okta at a conference, an investor conference. All day, OPEC will publish its monthly oil report. You can trade oil. That will move markets. Wednesday, we have Broadcom. I own Broadcom. We have Play, which is Dave & Buster's. Are they going to go the path of every other restaurant that has reported? Notable Investor Day, we have Target, Cat, and Dick's Sporting Goods. They're at annual meetings. They have annual meetings. That's going to probably move it. All day, H&R Block, Best Buy, and Domino's Pizza are some notable companies that will participate in Oppenheimer's consumer research. All day, Eli Lilly, Merck, all of this stuff, all day. And what's the big thing on Wednesday? The big thing is the Fed meeting. The Fed meeting at 2 o'clock. There will be a 2 o'clock. The Fed announces, hey, what are we going to do with interest rates? They're going to keep them steady. They ain't going to raise them. They're not going to lower them like Europe and Canada has done. That's pretty much not what the cards are saying. So they'll have their press conference at 2:30. 2:30, Jay Powell, no matter what he does, he's going to move the markets. And then Thursday, what do you have? Notable earnings, Signet. Adobe's going to have to answer for their new update on their privacy policy, which says if you create something in Adobe, Adobe owns it. They're going to have to, explain that one. That's a mess. But Thursday, what do you have? You have Tesla's shareholder meeting. If you haven't voted, I would urge you to vote. I don't care if you vote for or against. I don't have a dog in the game. But I do think Tesla without Elon is an absolute mess. You have Mondelez, Costco, and restaurant brands, some key names that will have fireside chats. And then Friday, Walmart will host its traditional Friday Associate Celebration at Bud Walton's Arena. That's not marking movement, but you got a couple of things. My point is this one newsletter sets you up for the week. And how do you get that? Well, you go over here to Daily Stock Pick, and you go to this second link. And you save 20% off your subscription to Seeking Alpha. It's as simple as that. I wrote an entire newsletter about that. If you don't want to join Seeking Alpha, join my newsletter. You can read it, because that's pretty much how I spend my Saturdays. Is I read that article, and then I go and I look at charts and I look at some of the fundamentals on Seeking Alpha. But it's a super, super way to look at things. Now, we talked about seasonality. 75% win rate in June for SPY. For SPY, 75% win rate. What's crazy is look at August for SPY. I would argue in July, you want to buy in June or July for QQQ because, again, for 14 years, QQQ is up. But look at August for SPY. That's a great chart. And, how do you get all these seasonal charts? Well, you sign up for Trendspider. And when you sign up for Trendspider, it's this top link at Linktree, linktr.ee/daily stock pick. You get this top link. It is Trendspider. It is the best charting platform out there. Now, how much is it? Well, when you sign up for a year, you get 6 months for free. It's $53.50. $53.50. And if that seems like a lot, and $642 is a lot, but if that seems like a lot of money, then you're probably just not trading with a large enough trading portfolio. And I would urge you just to click on the fourth link down here. It's Webull. Get the free desktop software. Whatever you do, you should be getting used to looking at charts, and you should understand what charts say. Well, Gary, I don't know what charts say. Well, go down here to the Education Center, right here on my newsletter, dailystockpick.substack.com. Free 7-day trial. You can read every article in there for 7 days. I guarantee you can read every article in there. It's great. Now, we talked about CrowdStrike, KKR, and GoDaddy. They're the ones, they're moving. Let's see. What do we have? CrowdStrike is up 6%. Fortinet and Palo Alto. Palo Alto's at 301. I mean, Palo Alto at 301, you can't beat it. Get it while it's at, around 300. CrowdStrike at 350. I would probably not crowd into this one. Dad pun. I would probably not crowd into this one so quickly. And the reason is because we've identified this range as a trading range. Now, I said when it was down here that you were getting close to your bottom of your trading range, but earnings, I wasn't sure if we would beat it or not. They blew it away. They gapped up. And you had an opportunity to buy it at 315. You're at 349 right now. 371. I'm sorry. We're at 371 on CrowdStrike. It is, you'd be up 20% had you bought it at that little low, but you don't time things. But I will say the MACD on the weekly, extremely high. The RSI, 63. You're almost overbought. I would have patience with this one. I'm not saying that you should absolutely own this one, but if you're interested, I would have patience. The 4-hour algorithm, it can find you an entry. But again, this trading range right here is what you really want to look at. If we pull this back, that's been since February. I mean, it's been a clear trading range. You've gone to the top, you've gone to the bottom. You've gone to the top, you've gone to the bottom. And that is a clear trade. Again, you're setting up a floor right at 300 and you're going to 350. Now, 370, I'd say that it pulls back. I would absolutely say that it pulls back. If we go to CrowdStrike here, we can look at CrowdStrike in Seeking Alpha. And we can see it's up 6% in pre-market. It's a hold in the quant. And the only reason it's a hold in the quant is because of the valuation. But the peg isn't that bad. Again, if they continue to grow, they have an opportunity. And when you go over to growth and you look at their growth, they're growing 34% year over year in revenue. They're only growing the median, they're only growing 3%. They are 1,000% above the sector. The sector is information technology. That's a crazy sector. Now, if we go to Wall Street and we look at this, we can go down here to the price target. It's $3.99. Still 14% upside. But now that you're trading at $3.70, it's not 14%. I would argue that you just wait. Be patient. I think you'll have a chance to buy this one under $3.50 again. It is an incredibly volatile name. So, and if you want to buy KKR, that one, we can go and look at the chart of KKR. I don't cover this one a lot. This is KKR and Company. I don't look at this chart, so I'm not very familiar with this chart. But from the 4-hour algorithm, you make 60% over 2 years. Buy and hold, you make 83%. Now you can see, algorithm has you out with a nice 7% gain. This one is up 7% at 105. 105 takes you up here, okay? It takes you to the previous resistance, and it takes you up there. Now, if we look at KKR here, we can look at KKR and the fundamentals and everything like that. The price target from Wall Street to 116. You're trading at 105. Your 52-week range, I think it was 105 was the high that it hit. Let's see. 108. 108. So you haven't reached that 116. You were trading in pre-market on you closed on Friday at 97.99. You had your chance. Now, the problem is the revisions. S&P inclusion doesn't automatically mean that you're a great company. It just means that you qualified and you're now included. Well, typically you can look at Tesla, you can look at others that have been added to the S&P. They haven't performed very well. I did it last week when something was taken out of the S&P. They were put into the Dow. Oh, if NVIDIA is put into the Dow and Exxon, there was something about that. I forget who, but Exxon totally, when they were pulled out of the Dow, they were completely outperforming the stock that replaced them. So just because you're added to this, don't expect a huge thing. But if you want to trade KKR, you could. And finally, the other one that you want to trade, GoDaddy. I'm not even going to do it. Take note. When the percentage of semiconductor stocks above their 50-day SMA hits the floor, buy the effing dip. That's what BTFD means. Buy the effing dip. When market breadth shows 85% of semiconductor stocks have fallen below their 50-day SMA, it's perfectly marked the capitulation and local market bottom. Rinse and repeat. This chart shows you, and this is what Trendspider can do for you. You can enter these things in. This market breadth, you can put them in the number of SMH that wind up below their 50-day. When the majority of them do, 85%, it's a buy the dip situation. You want to learn these types of things because these things allow you to take emotion out of your trade. Take emotion out of your trade. It's as simple as that. Now, I do want to point out the All In podcast. We will talk about GameStop a little bit right here because this is I will link to the exact time frame so you don't have to listen to the hour and 25 minutes of these billionaires going off about politics and things like that sort. This particular one is about GameStop. And it is about the SEC protecting people and how Roaring Kitty is doing a disservice to some people. Yeah, I don't believe it. I think I agree with these guys. Everything that you need to know about GameStop is out there. This is the trailing 12 months PE. This is the quarterly PE. This is the year-over-year PE. This is how bad that company is. Doesn't mean you're not going to make money. And that's what the new guard of stock pickers, that's what it's all about. It's about making money. So now GameStop, you can see the algorithm got you out with a 104% gain right here. Now it got you back in at $30.86. Did you want to buy this? I would have argued yes. And you were into, you had confirmation. Now you got all the way up to 47, 48, right there. And it crashed down. This was Roaring Kitty's crash down from 48. You did want to buy. It's a sell the news event, meaning that when Roaring Kitty had his live stream, I heard a lot of people complain about this. Roaring Kitty did what Roaring Kitty does. There was nothing about that live stream that was disappointing other than if you had higher than expected expectations. because the expectation I had was, hey, he's going to confirm that he's actually the one doing this, that there aren't hedge funds manipulating this. You've read enough about it. I would argue that you can trade my 5-minute algorithm. Again, the 5-minute algorithm, what you do is you sign up for Trendspider. I give you a discount on Trendspider, and then you email me. Go back to the link tree, and there's an email address right here in the upper right. And I'll send you the welcome letter with the 4-hour, the 5-minute, the 65-minute, everything that you need to trade just like I do. It includes watch lists, it includes scanners. You can find the stocks that you want to trade. But I would argue that you want to trade this stock. And the reason you want to trade this stock is because it's super volatile. You can make a lot of money on this stock, but you've got to know what you're doing. This is a 5-minute candle. I argue that the exit is a little screwed up. The entrance is A+. If you enter in when you see this one move and you get confirmation, it's an A+. I would be very nervous about going into the open of the market holding this stock. I think, again, Ryan Cohen, they diluted when Roaring Kitty was right before he did his live stream. They just screwed him up. 75 million shares they announced. They screwed him up. This is not one that you want to buy and hold. Even though Roaring Kitty has made hundreds of millions of dollars, it is not one you want to buy and hold. Absolutely not one you want. And if you want, then just watch this. This is one you want to trade. Everything you want is out there. It is explained. There is nothing that you need to protect you, but you will lose 40 to 50% and even 80 or 90% in this name. They will continue to dilute. Understand, whenever there's a short squeeze, Ryan Cohen has the ability to raise money by just diluting shareholders, and that's what he's going to do. Now, if you're a true degenerate, this guy is your guy. Tim Nackey on Instagram. Go and follow him. This was I'll link to the entire thing in the podcast. It is unbelievable. This guy bets 10 cents for every follower that he has. So he's been betting somewhere in the neighborhood of close to, I think he came up to $500,000-$600,000 or something in one bet on blackjack. He does one bet a day. I bet 1 cent per follower at BJ. BJ is blackjack. Currently $34,300 in profits. That's all he does. I mean, he comes on once a day. He's in Australia. He's fantastic. It is just awesome. I mean, it is awesome to watch. I really liked it. But this is true degenerate behavior. Now, I didn't put this up, but I will put it in the newsletter. Motley Fool came out with a article, and I think it was on Friday. And it's about Shopify. And they say Shopify is a once in a moment kind of time to buy. I would argue $58 was a better time to buy. You're down 0.21. You're at $61. Now, here's the quote in their article, and I'll put a complete chart in my newsletter. But the one that they said, the stock isn't down for no reason. Shopify's guidance calls for a slowdown in revenue growth and for gross margins to move slightly in the wrong direction. We see this as likely to be a temporary due to the current economic uncertainty, and revenue growth in the high teens percentage is still impressive in a difficult environment. While it will be important to monitor the economy, Shopify's forecasts for the next several quarters, we see the current pullback as an overreaction. I say it all the time. Any reaction in the market is an overreaction. And for Shopify specifically, I do think that this gap will get filled. The gap starts at 64. I would have hoped by now for an overreaction. We would have closed that gap a little bit. We haven't gotten there. It's been disappointing because the MACD is moving quickly up. The RSI is at 61. You're seeing it kind of turn over. Again, it's 0.21 down. We have a Fed meeting this week. This one, it gets hit right in the cojones for higher for longer. And part of the reason, we can look at the annual estimates revisions. This isn't great. 16 up within the last 3 months, 22 down. That's for earnings per share. Now for revenue, they're saying 22 up, but 19 down. It's not great. It's just not a great situation that you're in. Now the quant says buy on Wall Street, everything. But The momentum is what I'm going to focus on for this, because the momentum has not been good. Because 3-month, the sector that they're in, which is information technology, is down 4%. But 3 months, Shopify is down 18%. This momentum is horrible. Now, for 1 year, you're still up 3%. So for 1 year, you're not doing bad. We can go over to Wall Street and we can take a look at Wall Street. Wall Street's price target is 76. That's 24% upside. Now, there are 15 Wall Street executives or analysts with a strong buy. There are 23 with hold. It is a hold right now. I'm not certain that we're going to get back there. What worries me a little bit is you can see how extended in 2021 the actual price target was. It came down. Now, this stock isn't above the price target. It's significantly below. It's trading at 61. The price target is 76. They have brought it down. These are guys who have models, and they do a ton of research into this. But I would argue that, yes, I think you want to just be a little bit careful. Is it an absolute for certain? Well, it became a buy at 58. Yes, I think anything below 60 is an absolute buy in here. But could we be buying a dip that could last for a while? Well, let's go to the weekly. And this is how you look at stocks. We talked about the 200-day at $80 being a resistance level. You can see for 2 weeks here. In February, we got up to 91. $91 for both those weeks was the high. Now the lows, let's see, 79 and 73. And that was right after earnings, that's 73. And ever since those earnings, it was the previous earnings, the weekly has been going down. Now, could you time this? I would argue that the first level of support was right here at 70. We broke that level of support. Second level of support, I believe, is down here at 48. Can you get down there? Absolutely, you could get down there. Now, we talked about how in the 4-hour algorithm, the MACD was actually crossing up and it was going up. Look at this. The MACD is still going down. You've turned around on the RSI. You came from 35 up to 41. Hasn't been moving quickly. But again, you take a look at this. If we just move this back to December 2021, and this is the volume shelf, you can see the price runs from 24 all the way up to 68. I don't think that $80 is in the cards next week, but I do think this one is one that you want to hold in your portfolio. It hasn't done well compared to its competitors. And we can just look at the peers. One peer that I know is Melly. You can look at Shopify. I mean, these are all software names. Shopify at its core is a software name. And they provide small to medium businesses the ability to grow and the ability to get on the internet quickly and the ability to manage that internet. Now, they're in competition with GoDaddy. GoDaddy just got added to the S&P 500. And we can look at, let's see, we'll go total return. Let's see if it'll do total return here. Sometimes the chart messes up a little bit. But you can see GoDaddy during 1 year up 91%. Shopify's up 3.4%. So, one that I would probably, we can edit symbols. I would take out Cloudflare and I would put in Melly. But we can look at, again, Melly is we're going to take out Snowflake. We're going to take out VeriSign. We'll do these three. Shopify, GoDaddy, and Melly. We'll put in Amazon. Just for shits and giggles, we'll put in Amazon. And we can compare these four. And Amazon's going to be the big boy in the group. It's just by far market cap is $1.92 trillion. Market cap of Shopify is $79 billion. GoDaddy is $19 billion. And Melly is $81 billion. But you can see if we look at just the price return, then Shopify's up 3%, GoDaddy 91%. And this is over 1 year. Melly's up 32%. Amazon up 52%. I've said it before, I like Amazon over Melly. But I'm just showing you how badly Shopify has performed. Now, why is it this bad? We can go down here and we can look at, you can see 1 month return Shopify down 20%. It's bad. Now, when you look at the valuation, for full year. This is the PE full year 62. Look, it's the most expensive. Yeah, it's the most expensive. You can see GoDaddy, how cheap GoDaddy is. Now, when you look at the forward PE, it's still expensive, 189 versus 21. When we go to the peg and we look at the forward peg, this includes growth. They are the lowest. They are the lowest at 1.42. So again, the key is their growth. When they pulled back that forecast and they said, we're not going to grow as much, that was the problem. And that's the forward. And when you look at the revenue growth going forward, they're still saying 22%, but Melly's growing at 29%. I mean, Melly's beating them. So we can look at this stuff. You can look at the profitability. They're they're the second lowest. Amazon's the lowest, but that's because Amazon spends so much money. Is Shopify spending that money? Well, Shopify pulled back they pulled back their fulfillment. So they should actually be making more money, but it's at 50%. You can take a look at these things, and this is how you look at a stock. Shopify, again, with Motley Fool recommending it, Seeking Alpha still doesn't have it. It has it as buy. I think it's interesting. Now we'll go over to my favorite website for earnings. It's Earnings Hub. I like Earnings Hub. I loved it. This site is from the guys at Savvy Trader. And I do have a portfolio at Savvy Trader, but I just love this layout. And again, you can take a look at this during a time when we actually have huge earnings. This is a great website. But I want to point out Oracle, because Oracle earnings per share is $1.53 expected. They reported $1.41 last time. They're expected to grow by quite a bit. The expectations are high for Oracle, and they are trading rather high. So do I expect this one to make a move? I do. The question is, are they doing TikTok? How are they doing with Uber? But you can see when the algorithm gets you in here at 122, I'd say your top point is 130. Your cap is 130 on this one. Is it worth buying? I don't know. I mean, you make 73% at the algorithm over 2 years, 24 positions. I'd say it's pretty good. The MACD's down there. The RSI's at 65. It's a little bit tough for me to buy at 126, knowing that the algorithm got me in at 122 and my top is 130. But if you break through that 130, then I think you're off to the races again. You can see, look at this one. You get to 127. Look at this candle. You get to 127. Look at this candle. You get to 132. And that's the only one that's broken that 130 price. So for Oracle, you're kind of just in here in the middle with the MACD a little bit over the oscillator. The RSI is a little bit high. Your Bollinger Bands, they're kind of cinching up. Not really, but kind of cinching up. You've got confirmation above that 9-day. You're still positive on the 50 and the 200. I would say things look good. If you want to buy this one, I would just say stay patient. That's all I would say for Oracle, is just stay patient, because I don't want you to buy with the cap being 130 and all of a sudden, they report bad earnings. That's just it. I mean, their revisions, B+, 25 up on earnings per share, 3 down. Doesn't mean it's an A, but the revenue, 6 up, 22 down. And remember, if we go back here, their revenue, they're expected to make $14.59 billion. They only reported 11.45 last time. So it's a little bit tough. I'd stay patient with that one. That's my take on Oracle. Now, if we look at AVGO, this is my second largest holding, I think, in AI that I purchased in the last year next to NVIDIA. This one, their expectations are a little bit lower. So Broadcom, their expectations are a little bit lower. They reported $10.99 last quarter. Their estimate is $10.05 on earnings per share. Their reported revenue of 11.96. Their revenue expectation is 11.2. Now, we can go over here and we can look at this one. Am I buying this one? Well, I've got a pretty large position in this one, and I'm doing okay. I think I'm up 3%. It's up 1% at $14.25. I think my average purchase is around $13.50. Don't quote me on that one, but it's about that price. And I don't think you should follow me. But you can clearly see the top here is around $14.30, $14.40, somewhere in that neighborhood. I mean, that's the problem, is you're coming right up against this. If we go and we look at the weekly, I've said it before, you've got this range. And so your MACD super high up. It could cross up. You've got, you've got AI out the wazoo on this one. So Broadcom is just one that I am buying and holding, and it's a long-term investment. It is a long-term investment. Now, from the quant standpoint, it says hold. And the reason is because of the valuation. And I would argue that that forward gap, the peg, 1.9 versus 2.1, they're 5% below the sector. They're above it on the PE. So it's a little bit of a hey, I'm just going to look at this one. I'm going to put some money into it. I've added money as we've gone up. Now, it pulled back. We can clearly see here, it's pulled back since I bought it. But it's a long-term buy and hold. So you've got those two this week. Let's go to the social request. Jack, love the pod. This is from Instagram. I'm up 53% on CLS, and it's in a pullback recently. What's CLS? I think this is the Celestial. Yeah, Celestica. Would love your thoughts on the stock. I want to let my winners run, but it's easier said than done. So CLS, you're up 53%. What do you do? Had people told me, and I've heard this before, everybody told me when I started adding Apple that I should sell it along the way. And so before we go into CLS, I want to bring up a point. Because if you believe in CLS and you know what the company does and the story is there for you, then I would argue you stay with it. If you are nervous and you want to take profits, that's a personal decision. But going back here to 2004, when I look at this monthly chart, everybody told me to sell. Now, during the financial crisis, probably should have sold. Did I sell? No. During the the 2017 time, 2018, when Janet Yellen tried to raise rates a little bit and it was a complete disaster, did I sell? No, it just pulled back a little bit. Now during this time in 2022, did I sell? Sold a little bit at the end of 2022 just to raise some cash. It was a mistake. That was a mistake. It's at 144. I sold it around 140, 150. Maybe 160. It's at almost 200 now. So probably a mistake. Again, for CLS, for everything that I've read about CLS, I am not in this name. A lot of people that listen, they actually are in this name. But CLS, I've identified that 48.94 as support level. I would be patient with this one. You are down 0.21. CLS right here. I would look to be adding if it gets back below 50. I don't think that you're looking at a cratering of this stock. I say that, but looking at the weekly, you could have a cratering. You absolutely could have a cratering down to 40, and it could be just pulling this MACD back down to reality. The stock is just overbought completely. Now, I think this is an alpha pick stock. One of the things that I want to tell you guys is that alpha picks, if you don't know how to look at the fundamentals of a stock, you should sign up for alpha picks. Alpha picks is this third link right here. If you want to beat the S&P, it is 20 data-driven stocks, 2 data-driven stocks per month. You get one on the 1st and one on the 15th. And what I also want to point out is that they do portfolio reviews. And there is one coming up today, I believe. If you are part of Alpha Picks, you got the invite. But that's what I want to point out, is that Seeking Alpha provides these, and it's Alpha Picks, provides the portfolio review. And when they do the portfolio review, they go into specific performance about it. Now, the performance of this, you can see it's up 120% versus 41%. It is a fantastic, fantastic service. And I think CLS is one of them. Yes, CLS, they bought it on 10/16/2023. So if we go back here and we look at CLS on just in 2023, here in October 2023, we can see they bought right here. Now, it came down. It was at 23. Were you upset when you bought it at 25? Let's say you bought it at 27 here. And then the next week, it goes down to 20. Just like, our GTC type stuff, GCT. You're upset. Well, they told me to buy it. But now all of a sudden, it's gone down to 20. Are you upset when you've doubled your money in a year? In less than a year? That was October 2023. That was the lows of the market. You've doubled your money. So, Jack, I would say it's a personal decision whether you want to do it, but I would argue that we're still a strong buy in the quant. The valuation is the only thing that gets a C. Look, the PE below its sector, the peg, the forward peg, the trailing 12 months peg, it's 86 below its sector. This has the AI train all over it. This is an electrical manufacturing service. They make the coolants for all of the data center stuff. It's not a huge market cap. The market cap is only 6.2 billion. Now, I will tell you, at 52, your top right here is 61. Wall Street says it's a buy. There are only 9 analysts that cover it. So take that with a grain of salt, because the average price target is 54. So take it with a grain of salt. I would argue that with the quant being at a strong buy, and it has been a strong buy for quite a long time, ever since, let's see, it was June of 2023. Boy, the quant moved it to a strong buy at $14. Now it's still a strong buy. Again, you can look at the momentum. Revisions, 7 up, none down. Revisions, this is the last 90 days, 6 up on revenue, none down. So I would argue that if you believe in this stock, Jack, and again, it's got to believe in it. And don't tell me, well, I don't know. I don't know about this stock. Why are you putting money into a stock that you don't know about? If this is your number one holding, and all of a sudden, say you're up, 53%, and this is your big winner, and you don't know enough about their fundamentals, you don't know enough about their growth, that they're growing 10% year over year in revenue. You don't know that their EBIT growth year over year is 24%. You don't know that the earnings per share is up 72%. Now, when you get to this, these numbers, again, what happens with a stock that's growing like this is the previous years and the previous quarters numbers are harder to go through, and they're harder to beat. We can go over here to Earnings Hub, and you can type in CLS. You've got to use the tools that you have. But if you tell me, well, I don't know what this does, I just bought it because some dude on the internet told me to tell, that's not, some dude tells you to go buy a 55 Chevy Malibu. He doesn't tell you that there's, $2,000 a month in upkeep costs on that thing. You can't do that. You can't do that. You have to know what you're putting your money into. And when you look at this, you can see 44 days from now, earnings per share estimate 81 cents. They reported 86 cents. So they're actually looking like they're going to go down. And if you want to read the full summary, you can read the full summary there. But you've got to, if you believe in this stock, Jack, I would tell you hold on to it or add to it. I would say if you don't believe in this stock and you just want to trade it, the 4-hour algorithm is there for you. It's like a big teddy bear that you can hug, because the 4-hour algorithm just got you out with a 20% gain. If we backtest this for 2 years, remember, it's only been soaring for about 1 year. So it's not like it's been soaring for 2 years. For 1 year, for 2 years when we backtest this, and this is the key to Trendspider, you want to backtest these strategies. The 4-hour algorithm makes you 331%. It is 21 positions, so less than 1 per month. 24 months, 21 positions. Your average win is 26.18. You just made 19%. And that, I would argue, you should have been up here selling at 58. You should have been trimming when you made the 52-week high, and you lost strength. You lost confirmation. And the MACD was that high and it was crossing over. Whoo! You should have been trimming. Now you're down at 52. What do you do here? I would say hold. I would just say hold. The MACD is down there. It's starting to turn over a little bit. It's down. It's holding. Again, if you get below this 48 or 50 price point, that's when I want you to take action. That's when I want you to take profits. That's when I want you to look at buying the dip. Like Trendspider said, buy the effing dip. Buy the effing dip. So, yeah. Jack, there's your CLS. I know a couple other people that asked for it. Blah, blah, blah. Jared from Instagram. Healwell. HWAIF. Oh, God. Let me see. HWAIF. This is going to be a nightmare. Been on a small tear, bought a few at 85 cents and a few more days later. I'm at 150 shares at an average cost of $1.26. That's great because you're trading at 155. It's getting in the green for the entire week. Thoughts, trade it or load up. This is a trade. This is nothing more than a trade. This is a brand new stock. I guarantee. Okay, I'm going to look at this for the first time. I guarantee you there are not a ton of shares, and the market cap is significantly low. Let's look up. HWAIF. I have no idea why it would get you. It's not even on Finviz. Let's see. Do we have it in here? HWAIF. Let's see. HWAIF. Did I mistype it for some reason? HWAIF. It's not in Finviz. You shouldn't be trading this one. Look, they aren't making money. They're not making money at all. So we go over here to the summary. Let's look at this. The market cap, $216 million. There are Waffle House locations that are worth more money. Simple as that. 1 year, you're up by 181%. Great. Go and find me some information about this company. And then maybe I'd say, yeah, hold on to it. Come on. It's a penny stock. This makes no money. Market cap of $216 million. That's nothing. That's nothing. And NAVB is absolutely worthless. Trade 650 shares. Why did I have MAB here? I guess I did find this in VidBiz. Enjoy trading it. I enjoy trading it. Find me some information about it. I trade it. I wouldn't load up on this. What makes you think that this one's worth $100? Again, do I have confidence in this one because I can't find any information on it? If you know about it, go ahead. But this isn't in my wheelhouse. This is just something that, Healwell AI, it's an AI company. But, I would say it's not great. There's nothing that points me to, oh my God, it's unbelievable. Earnings per share of revenue of come on. Revenue of 4.58 million. You know what makes more money? DJT. You know what makes more money? GameStop. You know what makes more money? Anything. There's anything. Financials, we can go and look at this. Revenues, 3.8 billion. Again, it's worthless. For me, no way. You only go back. It's 18 months old. So, Bullish Bites wants me to look at AMD. Now, here's a real stock. Again, I'm a big cap tech investor. HWA, if that one ever gets to $1 billion in revenue, maybe I'll look at it. But, again, it's too small. AMD. Ironically, AMD has a buy. Now, the algorithm makes you 34%. Buying and holding makes you 66%. I will tell you, up here, this valuation is absolutely nuts for what this company does. You are trading on the future. And that's what you are trading on most of these chips. I would say if you're interested in starting a position for AMD, this isn't a bad place. It's under the 200-day on the 4-hour. If we go and look at the weekly, it's extended. It just, I would try and trade it if it comes back to its 50-day. You had the chance to trade it in October of last year where I added to it back here when it got to its 50-day, because every time this stock has gotten to its 50-day on the weekly, we've continued to go up. And 2022 was a buy the dip situation. Now, I will tell you, it's expensive. It is expensive on this one. If we go over here and we look at the quant, the valuation is a D. Why is the valuation a D? Well, because the PE, crazy. It's 175% above the sector. Even the PEG going forward, that's the only one that is a B+, and it's 45%. It's 1.1. It's ranked number 19 out of 65 in semiconductors. What's your number one? PI, Taiwan Semi, First Solar. Again, this is top semiconductor stocks. So NVIDIA is not even at NVIDIA's top 10. Micron, Qualcomm is another good one. I do own the Broadcom, which I just went over. But AMD, from a standpoint of this one, it's just a difficult sell. And the reason is, here, let's go back to AMD. It's just, you can take a look at the growth. They're expected year over year forward, they're expected to grow by 11.6. They actually went down 1.16. So it's hard to believe that they're going to grow when NVIDIA has such a lead. And make no mistake, it's an enormous lead. We're talking, for somebody to switch to AMD chips, you got to switch the software. You got to switch a lot of things. So it makes no sense. Now, I own AMD. I do believe if you want some analysis, you can look at these ones on Seeking Alpha, AMD versus Intel. AMD markets underestimate the potential. So it looks like these folks are buying. Now, I would argue that it's probably into weakness, that they're buying. The 4-hour algorithm has you in, and it has you in at a higher price, 168. You're trading at 162. This is down 3% today. Now, the 200 days up there. You probably are putting in a nice little floor around 150. If you get down around 150, I'd say you add to it. I just don't like the action in this one. And yes, I am buy and hold on this one. It isn't in my brokerage account, so I've got tax situations. I added in October. It's not long-term yet. I will continue to hold this one. I continue to think that this is much higher. But the obvious winner is going to be NVIDIA. It's going to, I'd say you still have a couple of years in NVIDIA, even though it's down 90% today. And I joke because it's not down 90%. It's at 121. And you're seeing the green candle. It's up, it opened at 120. Right now it's at 120. And we've got a green candle. If you go to the 5-minute and we just look at it, from a standpoint, this candle, if we look at the 5-minute algorithm, let's go to the 5-minute. You know what? Let's look at the 65-minute algorithm on this one. Because NVIDIA on the 65-minute algorithm, you can still make money. You make 94% over 8 months. And it has you in at 120. You win what? Let's see, 36% of the time. Your average win 3.93%. Do you buy and hold over the 8 months? You made 166%. I would argue you just want to buy and hold. But as far as stock goes, it has you in right here. Has you in. Would I buy it here? No. You're just as likely on NVIDIA to go to 200 as you are to 50. That's the crazy part. Am I selling? Hell no, I ain't selling. Because again, you're just as likely to go to 200 as you are 50. Their lead is so big. And that's where AMD bumps up against. AMD, Intel, Qualcomm, they can all come out with the crazy chip. Hey, we have the AI chip that's going to make it. NVIDIA has the lead. So I like AMD. I do own it. I'd say if you want to own all of these semis, just buy the SMH. Just buy SMH. You can buy SOXL. You can buy SOXX. SOXL is a triple levered ETF on the semiconductor business, and you can go and look at the holdings. It's a daily levered ETF. So it is not something you want to buy and hold. I say that fully knowing that buy and hold has worked incredibly well because SOXL over 24 months. This is in the 4-hour. It makes you 191%. Your average win, 27%. Part of the reason why I say, hey, AMD might not be a buy. It might be coming down. Look, we're up 44% in this one from the last buy. I think you've just seen a crazy run in these. And at 120, I think NVIDIA comes back down to 100, and I will buy more. So let's talk about the most important part of the newsletter here, and it's the scans. If you go down here and you just look, again, we went over GameStop and Roaring Kitty. Come down here to the bottom, there are scans. Every morning, I scan all of my watch lists. I scan the Dow. I scan the S&P, and I scan the NASDAQ. And I scan and I put them in this list. All of these stocks are bullish. Wish you would have bought CrowdStrike. That was in there. Wish you would have bought AVGO. That was in there. Exxon. We're seeing a cross up in the energy sector because we can pull up XLE. And XLE is on today's cross up. And is energy getting a bounce? Boy, we went right through that support level at 93. But you got to buy in here at 90. It's got an inside candle so far. I would wait for a little bit of confirmation where that 9-day starts to turn because your 50 is still moving negative. If you get a death cross in this one, again, if we are going into a recession, I've said this before, then energy is going to come down. Oil's at like $70, almost $80 a barrel. It wants to be at 60 or 70. And if the political whims and wills have their way, it will be at 60 or 70. Simple as that. It's simple. But XLE is one that got up. One that I really like that got a cross up is Citigroup. And I think this one, from the book value standpoint, we've been trading sideways here for a little bit, but I like this stock here at 62. Now you're trading at 60, you've lost confirmation. Do you want to buy this at 62 because the algorithm told you? No. No, because the 9-day is now turning negative. You are down below it. You want to wait for confirmation. The algorithm isn't perfect. It's supposed to take emotion out of your trade, but it's not perfect. This one makes you 27% over 24 months. Buying and holding makes you 22%. It's great. Your average win is 8%, but you only win 38% of the time, so you want to avoid it. Your average loss is 3%. So say you bought on Friday at this 62.31 and now you're at $60.85. Your stop loss should be the average loss of 3%. You should absolutely have a stop loss in when you buy that. That's how the algorithm works. It provides you a way to get in, but it also provides you an average loss in order to cap your losses with stop losses. Now your RSI at 38. Hold on one second. I apologize, and I am not going to edit that out because that's like yelling at the dogs. But here you go. Citigroup, I just think, again, if we go over here and we look at Citigroup. Let's look at Citigroup. Citigroup, the book value is $99. You're trading at 61. If they sold the business off, it'd be worth $99. This is a rebound play. This is a bank that's coming back into its, well, again, you look at Bank of America. Their book value is $33.71. Where are they trading? $39. You look at JP Morgan, best in breed. Their book value is $106. They're trading at $199. You look at Wells Fargo, which is another rebound play. Their book value, $46.36. They're trading at $58. The one that you can buy, and don't get me wrong, it's still risky. It doesn't mean it's automatically going to 99. But I have heard the best one that I've heard, a bank and analyst, Mike Mayo, he has said when a bank trades under its book value, you want to make sure that you have it as long as there's nothing inherently wrong with it. So I like it. I like it a lot. And we've got energy. Yeah. So if you have any questions, hit me up. I am going to get out of here. Market is open. The Qs, I think, are down a little bit. Yeah, 0.3. Oh, that's Qualcomm. Qs are down to 0.14. QQQ at 462. Again, we need to hold that 460 for the first level of support. If we don't hold that, look for it going back to 450. I mean, there's just not a whole hell of a lot of support within these two. The next is 455. I mean, you can see it right there, the candle right there that popped up in the middle. So those increments of 450, 455, and 460, they should be, again, if you want to protect your profits, you can do it. But realize protecting your profits may not mean that you get a bump. This week with WWDC with Apple, the Oracle earnings, Broadcom earnings, and the Fed. Oh, and we didn't even go over Tesla. Tesla is a cross-up. Tesla is a cross-up. This is one of the scans that came here. 177.50. You're trading at 176.50. Do you want to buy it? No. Thursday, they have their shareholder meeting. And a Tesla without Elon, if he doesn't get paid, it's just, I mean, that's a crime. If that man doesn't get paid, it's an absolute crime. Because, the board approved this, some judge in Delaware who definitely has political ties. And this isn't, I'm not a Trumper. I am not somebody who's talking, outside my book. But this guy definitely has political ties. And he turns down the pay package. And here's the thing. And I've read this. I'm no lawyer, but I've read that even if Elon wins this pay package and somebody disputes it, they will be in lawsuits forever. So while you've got this mired down, this is where you want to just hold this stock. You don't want to sell it because it may pop to 190, but that 140 is an absolute level of panic and sell. Because there is nothing below that 140. The valuation in this company makes no sense. You take Elon out of this company, and it is just off to the races with how low you can go. My guess, you'd get back down here to 60. From 170 to 60. And it would be very, very quick. So I have identified this range with the top being 414, because again, there are a lot of people that believe in him, a lot smarter people than I do. And that full self-driving, I drove to the airport last night in my Tesla. Wasn't that great. Was okay. Wasn't that great. So just be aware that this one, it could move. Okay, I'm out of here. Take care. See you. Bye. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears. Got
through my hopes and fears.